Hello and welcome to CMC Markets Trading Outlook for the week of August the 24th, 2015. My name is Colin Sadinsky, Chief Market Strategist. Our big topic this week is round number tests. It's a fairly quiet week for economic news. The big main event is the Fed's Jackson Hole, Wyoming conference, but the main event of that is the speech by Fed Vice Chair Fischer, and that's not until Saturday the 29th, so it's after the trading week. So really, it's a fairly quiet week for news. This week is more likely to be dominated by sentiment and emotion and technicals and tests, particularly as we're seeing at the finish of the current week that we're in a major sell-off for markets around the world, and that it's all started to catch up to stock markets, particularly in Europe, the U.S., Asia, and elsewhere. And so what we're seeing is heading for is a number of round number tests, and a few of them I'm going to look at in particular are 10,000 for the DAX, 2,000 for the S&P, $40 for crude oil, among others. But those are three of the big ones. And what that's going to show us is as we get here into Friday is whether the markets are primed to continue trending lower, or are they getting oversold here? We're seeing signs that we might have gone down a little bit too quickly. Maybe we get a short-term bounce earlier in the week, but we could still see things weaken through the week. We're moving into what's historically the weakest time of the year for stocks. Between mid-August and mid-October, this sell-off has, on a seasonal basis, arrived right on time and right about when you would start to expect it. And what's driving it? Concerns over the world economy. We had flash PMI numbers come out overnight, the first glimpse at the world economy in August, and it wasn't all that great. China missed badly and was well below 50. There, it looked like they're into contraction. The United States came in below expectations. Japan beat expectations, but everybody kind of ignored it, and Europe was mixed. So what are we seeing? We're seeing a weakening U.S. dollar, weakening U.S. stocks, weakening European stocks. Where's the money been going? In currencies, out of U.S. dollar and back into other things, back into defensive plays. Gold, yen have been rallying, and interestingly enough, the euro's been on the rebound as well. It's really stepped up and taken advantage with some of the pressure from the U.S. dollar coming off. So I'm going to go through a number of charts, and today's video really is going to focus more on charts and on technical analysis than on economic data, because it's a fairly light week for economic news. The technicals and the market sentiment are really where it's likely to be at. I'm going to start off with the S&P 500, which has been plunging here today. It broke down through 2040, took out this big channel, and then the bottom just came out from under it. Look at this, it's dropped down through 2015 and taken out, and now it's testing this big 2000 level. Should it fail, next support is in here in this 1970 to 75 area, back around the December-January lows. Now, what is interesting, and I note here, is that we are seeing the RSI is getting a little bit oversold here on the S&P. This is the first time that's happened since the end of December, and when it happened back then, we had a nice trading pop in the index, and at the time it had rallied to a new high. I don't think we're looking at that in the near term with the weaker seasonality, but we are at a point where perhaps we might bounce around this 200 level in the short term, first supported in around 1993. And first resistance, this Fibonacci level around 2015. So we could see some choppiness here in the S&P, possibility of a small bounce, but if we do see it follow on and carry through, that would tell me that we're into a real heavy-duty seasonal sell-off that could see the markets trend significantly lower over the coming weeks. Looking at market sentiment also, we're seeing that selling pressure against the S&P has been increasing. We've seen top clients now 67% short on the S&P, and that's risen 8 percentage points here today. So we are seeing some continued bearishness on the S&P. I'll also show a couple of other U.S. indices with a little quicker here. The NASDAQ, again, we're also seeing here clients getting more bearish, 71% short on the NASDAQ. And look at this one here. We took out the 200-day moving average, which was here near 43.90, and then bang, the bottom's fallen out from under that as well. 43.55 support has failed, and it's in around 42.75. Potential support at this Fibonacci cluster here, which is in and around 42.30 for the NASDAQ. Again, it's nearing oversold, not quite there yet. We could still see some pressure on this one, but if we do get a bounce, it could be contained initially by this 43.55 level. I'll also move here and show the Dow briefly, US 30. shows us the same thing. In the last couple of, we've been teetering for a while, and you might even be able to call this a rounded top. For a while, this had been a sideways channel to me, and but since you've started to break through the bottom, we've really seen the bottom fall out from under it, passing through 17,125, 17,100. Here was this death cross on the Dow I had flagged a few weeks back, and there was all kinds of chit chat about whether this was on Twitter and other places about whether the death cross was meaningful or not. Well, you tell me. It's the bottom is increasingly fallen out since we saw that. It is still a bearish indicator. And so we've taken out 17,000 here. This could be a round number resistance level. This high here, 16,965. We've taken out 16,835. The recent low here, 16,645. We are getting oversold. Could get a bounce, but again, this Fibonacci level here, 61% could contain this. On top of that, technically, we should know when you see a 62% retracement level get breached, it's often a signal of a full round trip. So it is possible in the coming months we could see the Dow retest 16,000 or even 615, 850 before this all gets washed out. But as I say, usually the 61%, particularly if it gets retested as new resistance, could be the signal of a potential round trip for the U.S. market. I'm going to switch over now to Germany and take a look at the DAX here. The DAX also has been falling quite substantially. I'll remove this smaller Fibonacci here, and let's look at the bigger one here. So I've got two retracements on here, one off of this low in December and one off of this low in October. Now the DAX is getting as oversold now as it was back in October before it had a big rebound. So we'll be keeping an eye out for that today. But look at this here. It had shot up. It had tried to stage a rebound, didn't get very far, was slammed right back down, opened and closed fairly close to its lows of the day. So it does seem to remain under pressure. And look where it did run into resistance. It shot up into this Fibonacci cluster here between 10,375 and 10,435 and was not able to get through. So once that was breached, it's now become resistance. On the reversal of polarity, this could become resistance for a while. Next downside support is here, the 10,000 level. 10,000, big, huge, round number. Really a lot of psychological focus on it. If it holds 10,000, then maybe you can start to stabilize and base build. If it breaches 10,000, would be indicative that we're into a larger potential decline. This one here, we've already taken out the 62% retracement. The 62% for this broader rally was here in and around 98.90, and so at the minimum we could still see it come back potentially to into the low 9,000s here. If 10,000 fails, then this next support zone's in here in and around 95.55. So which trails over to there. So the DAX is another one getting oversold and nearing a big round number test. On the sentiment, we'll see though, interestingly enough, this is still long. Clients were pretty substantially long on the Germany 30, but we're seeing that get trimmed back today. Look at this. We're seeing the buy 73% for top clients, down 11 percentage points on the day. So we are seeing clients taking those positions back. I'll also highlight here the UK 100. Another breakdown here for the FTSE as well. Taking out this 6,300, taking out this 6,255. It is getting oversold on the RSI, so perhaps this could get contained. Well, let's take it out to a year here. We'll see. Look at this. We are down. We're getting close to probing the October-December lows here. In this October low was 60.65. December low was about 61.15, and this Fibonacci level here about 6,100. So perhaps we might see another 100 points of weakness before we get into this zone where we could start to see some support for the FTSE, and with that getting oversold, there is potential for some stabilization or a bounce. What's been driving this down? A lot of it's been driven by the Asia Pacific markets driving the bus. I'm just going to quickly show here the Hang Seng and a couple of other markets. Hang Seng continues to fall. We've taken out this full move here has been taken out and more. We are seeing it continue to decline. It is getting close though to its December. In fact, it's broken it. 22,350 has broken its December lows, so it seems to be in trouble here. Next round number 22,000. First upside test here around 22,525. We are getting oversold. We are getting a positive divergence, but and as we saw when we got oversold back at the end of June, we did get a bit of a pop. So we could be setting up for a bit of a short-term pop here. That could though get contained in this 22,775 to 23,000 area. And if we look here at the China H, the key round number for this one again is in and around 10,000. Huge run up, double top, huge run down. We're getting back pretty close at this 10,000. Not only is it a round number, but look, it's the October low of last year, 52-week low here for the China H. If that's breached, look out below. But we are getting a positive divergence here and an oversold RSI. So once again, it is at a point where perhaps this downside might get contained. We could see some consolidation or perhaps a bit of a bounce. I'll just do the Nikkei and the Aussie to wrap here, and then I'll move on to currencies and commodities. So let's do the Aussie 200 here. Again, this has been plunging. It's the most oversold it's been here since back last fall. That was the end of September, early October of last year. It had a big double bottom. It's getting back into this support zone again, where the sell-off could get contained between 5,100 and 5,135. Initial pop resistance maybe around 5,200. That's 5,265. And finally, the Japan. We'll show here. Look at this one, getting mixed on the client sentiment here. A number of clients still bearish, but look at this. We've had quite a move in of bullishness on the 225. Looks like some bottom fishing here. Up 21 percentage points to 55 for top clients. Is showing some renewed enthusiasm, or at least some people trying to buy the bottom. Likely, it looks like they're trying to defend the bottom of this trading channel here in and around in the 19,000 to 19,260 zone. Getting oversold on the RSI. Most it's been in over a year, so perhaps could be gearing up for a stabilization or a bounce here. If 19,000 fails, though, 18,740 next support, and it would look pretty ugly here because the Nikkei still trading well above its 52-week lows, so there is significant room for this to come back off if this 19,000 channel fails. So moving on, I'll go into commodity markets now. Commodity markets are also been heavily impacted by a combination of factors, but China's been driving things down on reduced demand for resources. We're certainly seeing that in the copper market. But what's interesting here, we are getting a positive divergence start to build in copper. In fact, I'll just draw that in to show it a little better. Had been oversold. We are getting a positive divergence here, even while this downtrend has remained intact. But we're trying to stabilize here in this 225 to say 234 range. But we'll see, is this another pause in the downtrend or the start of a base? But at least this is as a sign that the downward pressure might be starting to ease off a little bit. Let's look at crude oil. Particularly WTI here. As I'm talking, the WTI has breached the $40 level, and we can see it's dropped down and it's holding below in this 39.70 to 39.90 range. So it still seems to be under pressure, but at the same time, it's really oversold here too. So I'm going to take this daily out for a year for a minute. We'll see. It's almost as oversold down here as it was oversold back there in January before it started to rebound a bit. But let's go out here, and what I really wanted to show is the question people ask me is, how low can oil go? Well, here we are. We've breached 40, and the next support for it is in and around here. It's the 2008 lows, and that is in and around the $35 level. So this 35 to 40 could be a fairly significant potential support zone for crude oil. Now, gold is also intriguing here. Gold has had a pretty nice run, and I was talking with some people today about, well, what could happen with gold here? is it done, or is it just getting started, or what? So we've had pretty big sell-off in gold, and it's just starting to come back a little bit here. It's up. It's actually breached this 38% retracement level, traded up to 1167, and has slumped back a little bit. RSI is getting a little overbought. It's had a nice pop here. Maybe gold's due for a consolidation in, say, this 1142 to 1160 zone. But at the same time, if the US dollar does continue to weaken, that can be positive for gold. What's moved gold up? US dollar has come back down on speculation that maybe the Fed won't raise rates in September after all. And the devaluations and the race to the bottom in some of the emerging market currencies, where the value of paper money is declining and people are going back into gold as a historical store of value. So gold does look like it's due for a pause here. I think maybe it might be able to eke out some gains this week, but they'll probably be smaller gains than what we've seen in the last 3 weeks. I'm going to move now to currency markets, and we'll start with something really intriguing, is the euro-US dollar. Even with all the talk about Greece and everything else that was going on there, and there's more elections coming a lot of places throughout the fall, and look at this. The euro is building a massive, massive ascending triangle base here, which I will draw in. Look at this. Right across here, below 114.50, and we're seeing nice higher lows, really big, huge 6-month ascending triangle base forming in the euro. And we've got this uptrend here in the RSI as well. Now we are getting a little close to maybe getting overbought on the euro. Maybe it needs to pause here. Probably run into resistance here around 114.40. But also look at this. It broke out here over its 200-day moving average near 113.40. It has cleared that now. That's indicative that we could have an upturn. And if this continues to hold up, we could start to gear up toward a golden cross. But the golden cross probably a month or two out if we are going to get one. But overall, though, this is still looking like a very strong base forming in euro dollar, and it's quietly starting to turn up. Let's go over and take a peek at cable. Cable holding steady here, generally creeping higher. Wide trading zone of about 152 to about 159. But this 155.80 that had been the center of the range has now become support. We're creeping higher on speculation that the UK may raise interest rates sometime, as well as the US. And look at this RSI also creeping higher, showing us that upward momentum is building. What's sentiment doing? We've gone, we're slightly positive now. We're kind of in 50-50. We're just starting to inch into positive sentiment for cable. And for the euro, if we look here, we can see very different. We've still got clients pretty substantially short, and interestingly enough, top clients have increased their short positions by 13 percentage points. So what does that suggest? It suggests people aren't yet believing in this breakout. Maybe we see it needs to do some coming back off, backing and filling, and show some support before it could really muster enough strength to advance from here. We'll do CAD and we'll do Aussie dollar to wrap up here. Dollar CAD and dollar yen, of course. Dollar CAD is still showing signs of topping out, amazingly enough. Just as I showed, when you looked at that crude oil chart and I said, yeah, it's breached 40 and next support is 35. But when you think of where oil has come from, 60 in recent months and $100 plus a year ago, oil probably doesn't have that much farther down to fall. It's probably getting pretty close to a low. And we're starting to see that in the dollar CAD as well. It's had this huge run up. It had gotten overbought. We're seeing this negative divergence form, this big rollover top here in the RSI, telling us upward momentum starting to fade, and we're seeing signs of a similar top here in dollar CAD as well. Looks like we've got a double top here near 132. It had started to slide back, but it's basically bouncing around here between 130.50, 132. If it starts to take out 130, would signal the start of a downturn for US dollar CAD. And while I'm down here, I'll do US dollar yen as well. Let's blow this one up. We can see dollar yen starting to turn down. This is the US dollar weakening. 125 support has become 124.30 support resistance, has become 123.30 resistance, took out 122.40. We're down here testing 121.68. This 200-day moving average here, 120.55 near these previous lows. That's probably an area that we could see get tested in the coming weeks, this channel and 200-day moving average support. we're not quite oversold on it either, so there is potential room for further weakness in dollar yen. And the talk of the town over the last couple of weeks was dollar yuan. So this was the two big upward revisions here. Since then, we're actually seeing it stabilize. But look, and it was pretty overbought, so you're working that off. But look, you're seeing lower highs, higher lows, symmetrical triangle. That's almost a flag pattern because of the way this spiked. Now, I'm not expecting another devaluation, but to be fair, we have to say technically that this kind of a consolidation pattern is more of a continuation pattern. It suggests a pause within a bigger trend. So we could still see CNH weaken from here, perhaps take another run up at this 650, low 650s area is a possibility if we get a breakout. And I'll wrap here with Aussie dollar and Kiwi dollar. The Aussie dollar is just kind of stabilizing here at the moment. It's tried to rebound. It's having trouble. It's really struggling to get above this 74.40 area, support around 72.20. But look, when it came up here, touched 50 on the RSI, did it here, and it's just not able to get through. Indicative that it's still in a broader downtrend. It really needs to get above 50 to signal an upturn. And finally, we'll take a quick peek at Kiwi dollar. There we go. Kiwi dollar has actually broken out over 50, as we can see. It had been in a downtrend. It's been base building, starting to go in a bit of an upswing here. First resistance is in and around. That's about 66, almost 67 even. That's 67.75. The question is, how far can it go in an environment where the RBNZ might be cutting rates further? Hard to say. But if the US dollar continues to weaken, taking some of the pressure off of Kiwi dollar, or if we see milk prices improving, could help the currency here. So overall, we've had a number of very strong moves in markets. A lot of markets are getting overextended. There is a possibility we could see a consolidation or a reversal to start the week, but the sell-off in stocks we're into the weaker time of the year. Even if we do get a bounce back, it's more likely to be a trading bounce than a real significant turnaround. So we could see quite a bit of volatility in both directions this week as traders try to figure out which way to go, and because of that, it could generate some significant opportunities.